Monday, April 28th. My old eyes can't see, but I think it does say 28th. Just so everyone's aware, I am going to, I forget, Elkton. I forget what town, it's by Grays and Torreys in Colorado. Golden, something like that. And I'm going hiking on Thursday and Friday. So I may do a show Wednesday. That would be the last one of the week, but Thursday, Friday, Saturday, and I am in Colorado, so I won't be there. I got a lot to go over. We got a lot. Bitcoin we'll talk about. We'll talk about the shipping crisis that may be happening right now. Gold. We'll talk about Google. We'll talk about the Super Bowl of earnings week. It is the Super Bowl of earnings week. And we'll talk about tariffs and trades and everything that goes along good. I did put out 2 posts this weekend. Okay, I did 2 newsletters this weekend. The first one was my favorite podcast. Both of these are free at the newsletter. So dailystockpick.substack.com. That is the newsletter. If you can't remember that, just go down to the link that's down below, linktr.ee/dailystockpick, and you'll find it, the Daily Stock Pick newsletter right there. It is free. So sign up for the newsletter. Let us help you grow. You just heard the theme song. But it's my favorite podcast. And somebody had asked this. I think it might be Wendy or someone said, hey, what do you listen to? And so I went through all of the podcasts. The All In podcast, Compound and Friends, Animal Spirits, Rich Habits with Austin Hankowitz, Risk Reversal, Investing Experts, which I was on. I might be on some of these, like Tyler's. I've asked we've communicated back and forth. But yeah, so these are the ones that I listen to. So if you have any interest in that, that's my favorite band, the Somerset. Go and listen to their new song, Adidas. It is exactly what it is. All day I dream about sex. Yes, it's all about sex. So it's right there. Again, this is just kind of my listening. So, I make mention that I do about 5-10 mile walks, 3-5 times a week. So I have a lot of time to sit there and listen to it. Don't necessarily listen to music other than when I run. The second one that I wrote, which was yesterday, was the Seeking Alpha Premium Sale. You get an additional $30 off. Okay. So it's $269 instead of $299. And you get the May Alpha Pick. So again, you can use this newsletter. You can use the links in Linktree. It is down here, right here. Seeking Alpha exclusive offer, 30 days off, $30 off, and a free 7-day trial. It is the third link down there. These are my favorite things. So if you have Seeking Alpha, or if you don't and you're thinking about it, go and read the newsletter. The first thing I love, the quant system. You'll see me go over the quant. It's how it saves me time. Do I have to go in? Excuse me 1 second. Do I go in and actually look at the PE of everything? No, I want to know the actual rating. So if I just want to go in and look, let's look at Amazon. Amazon has been a strong buy. It just moved to a hold in the quant, and the valuation's a D. I know that the valuation is probably high. Okay. The PE is 30. It is high. If I want to know exactly what part of the valuation is high, I can go over to the AI, analyze with AI, the analysis. Amazon's valuation appears stretched. For instance, its price to sales ratio 3.1, higher than the sector of 0.81, indicating a costly stock. Similarly, Amazon's price to book 7.1. They don't even mention PE, but I just know PE at 30, it's a little bit high. So for me, again, it's just an easy way to look at this quant rating. Growth, A-. I know they're going to grow. They're growing at 10% revenue year over year. Their leveraged free cash flow is growing at minus 0.18. That might be why it's a minus, A-. Profitability, fantastic. Look at the profit margin. But you can use this factor grade, and then you can use analyze with AI to actually determine exactly what it is. That's the first thing that I love. It's the quant. It saves me so much time. I don't have to dig through details. I don't have to go through annoying pop-ups like most sites, FinViz. And it's presented in a nice, easy way. Again, it's just over there on the factor grades, analysis with AI. I just showed you that for Amazon. Easy to read chart. So I can look at this and I can say, you know what? Right here, Amazon is trading 52 weeks, 151 to 242. It's right in the middle. Earnings per share, $6.25. That's fantastic. That's fantastic. PE 30.23. I don't even have to go to the valuation. Short interest, nobody's shorting this one. Market cap, $2 trillion. So again, it's nice and easy. You can import your full portfolio. I went through and I built the top 2025 stocks, and I can go and get a health score of this portfolio. It's 4.42. And if you import your portfolio, you'll get the health score for it. I love that because I love going through my own personal portfolio. Customizable screeners. I built a screener for Peter Lynch. Peter Lynch said, hey, I like, sectors and industries, PE gap, PE non-gap, earnings per share, and then debt to equity. Yeah, I did all that and I found all of these. You know what's in there? POWL. You know what's in there? First Solar, SMCI, some names that you may know about. It's in there. I can scan for them. So I like that part. Plus an additional bonus, you get the Alpha Picks for free. Again, Alpha Picks has outperformed the S&P. So if you want that, get it while it still lasts. I think it's going on for the next couple of weeks. Now, let's talk about things that don't happen in a bear market. There's a question, are we in a bull market? Are we in a bear market? Exactly what? The Zweig breath thrust. I have ZBT. I have no idea what this is. If you want to know what it is, go to Perplexity, go in and ask that. But I don't exactly know what it is. The fact that New York Stock Exchange had 6 days with at least 70% advances over a 2-week period. It doesn't happen in bear markets. It just doesn't. So are we in a bull market? Maybe. But remember, most of the time, stocks can be down double digits on the year, but it's quite rare. When it happens, there's always a major catalyst. This is a man-made catalyst. This isn't anything other than a trade war that was started. You had a great economy with good unemployment, with good inflation coming down, and the Fed was set to cut. Didn't cut soon enough, so what did? He started a trade war. So again, you look at the times when it's down double digits. Fed policy mistake in 2022. They had to hike crazy. The great financial crisis in 2008, 2002, tech bubble, 2001, tech bubble, 1974, recession, World War II, Great Depression. You get the idea. This was man-made. So I don't want to say that we are in a bear market, because a man-made bear market can be turned around. It just needs to make sure that we don't break something. So if you're saying that this market is like the 2000 dot-bomb bubble, this is a great chart, okay? The NASDAQ composite percentage is on the left. In the 3 years after Netscape's release, if you weren't around for Netscape, it was a browser, and it was huge. You can see the blue line is Netscape's adoption rate. The red line is the ChatGPT adoption rate compared to the NASDAQ composite. Okay, that's the NASDAQ right there. If this is the dot-com bubble, you're in 1997. Okay? You've still got 3 years until the dot bomb. If you're in 97 and I told you were 1997, you had till 2000 when stocks really dropped, you'd be pouring money in like crazy. So, again, are we in a bull or a bear market? Humphrey Yang points this out, and you can watch this short. Don't miss the best days in the market. You don't want to miss it. Again, I have said I pulled my money out. I have thrown my money back in. I did buy some QQQ and VOO on Friday. But it was small buys. It wasn't huge. I'm just inching my way. Again, I'm 80%. I believe, I haven't done the figures yet, but I believe I'm 80% in the market. Now I want to talk about what's going on with the economy. Because remember, we are in a quote unquote trade war. What does that mean? This is what exactly the White House has put itself and the country in a bad situation, but nobody realizes it yet. So the CEOs of Home Depot, Walmart, and Target told Trump last week that you might start seeing empty store shelves. When might you start seeing it? Well, cargo ships are now arriving from China completely empty. So shipping, and I'm not an expert on shipping. I just listened to somebody who said this, who is, and I'll post those up, who is a CEO of a shipping company and experts on shippers. Again, I listened. And what they said was, you can't stop ships because they are timed. So a ship leaving China, just because it's empty, can't sit there. It's got to go. So China ships were arriving 40% capacity. They since, in the last week, have been arriving empty, 100% empty. So again, around April 10th, China to the U.S. trade shut down. It takes 30 days for containers to go from China to L.A., 45 to Houston by sea, 55 to New York. That means there are no economic effects of what was done on April 10th until May 10th. It is now April 28th. Around that time, it started to happen. I saw the last economic advisor in the first Trump administration, Gary Cohen, saying this over the weekend. All this will start in the Los Angeles area. After about 2 weeks, it'll start in the Chicago and Houston. Let's say the White House, after 3 weeks, changes its mind on May 31st. This isn't working out like we thought. Tariffs go back to zero. Let's say China, bygones be gone, bygones will go things. Let's say every factory in China that got screwed by their orders being canceled says the same thing, no problem. The problem is, even under the most favorable conditions in China, the factories restarting economic ties as though nothing happened. It will take at least 30 days for the economic activity to be revised. So you're looking at June, July, at best case, and they are still going on about the trade war. So this is the FreightWave CEO telling you exactly what's going to happen. Shortages will probably show up late June, July. Consumers will really start feeling the shortages during back to school season. That's what's happening. And then you see this, just a total is that 40% of cargo ships leaving China were empty today. That's not from COVID times. That's from April 26th, 2 days ago. Okay, so again, where are we? Well, let's just be honest. We'll go into it again. Just let me see my notes. Yeah, it is what it is. Again, remember when we had a COVID shortage, when the toilet paper ran out and people were hoarding toilet paper? That's what you might start seeing again. And toilet paper was, I don't know. Just gets me frustrated. Let's see. I would say gold ETF just saw an outflow of $1.3 billion this Tuesday, the largest outflow in 15 years. Did you witness a top? Remember, when you see huge volumes, that's usually meaning that there's a top. Doesn't always mean that. You can see this back in May of 24, when gold ran up and then it just went sideways. Maybe we're going to go sideways, but that's GLD. Okay. GLD. I own the top quant stock, NEM, Newmont Mining. And I own that because it's a gold miner. Okay, I don't own GLD. I should have just owned GLD throughout this. You can see on the 4-hour algorithm right here, the 4-hour algorithm provides you 36% versus a 62% buy and hold over the last 2 years. It has been a record run for gold. I don't care what strategy you put in there. Buy and hold was going to beat it because this one wins 52% of the time. So if you think that this is a top, wait for the 4-hour algorithm. You can do that, but have we seen a top in gold? If the supply chain starts to short again and we see a stagflation event, I would say no. Gold is going to be a run for the safety. So the futures are down slightly. There's nothing to kind of throw a red flag at. Tick lower. It's a huge week. You've got PayPal, Visa report for Tuesday. Then Microsoft, Meta will report on Wednesday, and Apple and Amazon on Thursday. You've got tons of data coming out as well. So it's a big, big week. If you want to know all the earnings that are coming out and exactly what's going on, you can look at this article. Okay, today you have NXP Semiconductors. Tuesday you've got Pfizer. And then Wednesday you've got Microsoft and you've got Meta. Then on Thursday you've got Apple and Amazon. And this article goes over everything. Friday you got the oil giants, Chevron and Exxon. So you've got a ton of data if you want to read about it. In these, again, they're going to set you up to actually understand what's going to happen. And the big tech earnings, high stakes, earnings week, and tariff jitters. That's what it's all about. And you can read this one. Now, I want to go over it because this was a great one. Understand earnings. If we just go to Earnings Hub, okay? Earnings Hub is my favorite place for earnings. And we look at this. Last week, I want to bring this up. Tesla reported horrible earnings. Horrible earnings. Just horrible. Yet they had their best week in a long time. Okay? You can see the stock trading down here at 236. You're at 284. In pre-market, you're at 289, up almost 2%. And they had horrible earnings. Google, on the other hand, had a fantastic record quarter. And they didn't move as much as Tesla. You know, Google, amazing quarter on the earnings front. Their CEO talked about Waymo. Okay, they don't get the value of Waymo. This could be a $100 to $120 billion investment in Waymo alone that they're not getting credit for. That's on the books. That isn't even valued into the stock. It came out, they may actually own 10% of SpaceX, which is another huge one. They're killing it on cloud and subscriptions. And they didn't move like Tesla did, who had bad earnings. The market for Tesla focused on just Elon coming back. The market for Google focused on search. So you don't know how the market's going to react to specific things. That's what makes the market. Okay, but go to Earnings Hub, pick out your favorite stocks, understand how they're going to report. Microsoft, for some reason, they are earnings per share, $3.22. That's 1 cent less than what they reported last time. $68 billion in revenue. They actually reported $69 billion last time. And the stock is going in weak, extremely weak. Do they have some type of news? Again, this one is traded off of 385 there. The 4-hour algorithm got you in at 385. It's at 392. You make 26% over the last 24 months, 35% if you buy and held. You got a gap up here, 440. Again, I think Microsoft is in a good position to outperform. They have zero expectations. But what do they say? I don't know. You got Meta coming up. The Meta's in that trial. Do they have an opportunity to actually, move up past this 550 that was resistance, turned into support, and didn't provide any support on this downturn? Will their 50-day just bounce off that 550 and start moving back up? Will they have some type of llama update where they do something? I had a friend, John, who bought the Meta glasses. Unbelievable quality and ease of use with their new editing app through Instagram. He's in China right now. Just put the glasses on, wear them throughout the day, put them into this app, and boom, it creates a full freaking video for it. And it was good. And he, by the way, is a music video director. And he was amazed at it. I said, did you put this in editing? So he goes, nope, not one bit. I thought he did some editing to it. Unbelievable. And then you have Apple and Amazon. Apple's at 210. Did you get it under 200? Made sense. Amazon at this 188 level that I identified. Again, if you want the 4-hour algorithm, it works for many of these stocks. The 4-hour algorithm in TrendSpider, right here, TrendSpider. You can get it. Sign up for an annual plan right here. Okay, it's on sale. Just use my link tree, linktr.ee/dailystock. It's the top one. Go over there, check out the price. They have 2-week trials. You don't get all the tools that I provide in the 2-week trials. And the reason, I think it takes you more than 2 weeks to actually learn this software. So go and play with it. If you like it, sign up for an annual plan. I had somebody, I think Ryan, this weekend, who said, oh my God, this tool is amazing. Why did I wait so long to sign up for it? And he signed up for the 2-week trial. He said, I'll hit you up in 2 weeks. He's sure he's signing up. So this is Deidre Bosa, and she is holding the new Google Quantum chip. This is a great Instagram post. This is just her talking about the quantum computing. Again, something that Google doesn't get credit for. They have a chip, a quantum chip. Now, does it change the game? No, not yet. But again, it's Google. And just an alert. U.S. Treasury Secretary says trade talks are progressing positively, particularly with Asia. This marks the third Sunday in a row with similar statements and no trade deal. No trade deal. Just so you're aware of that. We don't know what's going to happen, but the trade deals is what this market is hanging on. And I will tell you, by the dip, we are down from the highs, and it doesn't feel like it. We can look at the QQQ chart. Use your charts. Okay, go to a weekly chart. Does it look like we're turning around? It does, but it's not for sure. It looked like back in 2022, when you had this move up in March, it looked like we were turning the table and everybody was accepting the rate increases. They didn't, and they kept moving. And then here in June, oh my God, we're out of the woods. No, we weren't. Because in August, once you hit that top, you move down. October was the low. That's what happens in bear markets, is that you get these runs. So is this the absolute turnaround? I don't think so, because we just went over exactly what happened. But if you bought during this downturn here, QQQ at 345, were you happy? Well, maybe a year later in June, you were happy in 2023. You don't optimize this, but if you continue to buy this, then maybe that March 2022, maybe you trim that in March of 2024. Take some 15% capital gains instead of, income tax at 25, 30%. So that's how you do a long-term play. You don't get in and out. You trim. Okay, you trim. Do those trims. Just don't think that, oh my God, I'm just going to get out of this. Because again, Humphrey said it, you want to be in the best days. Trump administration would like to roll out trade deals this week, at least that outlines that have been agreed upon, per sources close to the matter. Again, lots of moving targets that could delay matters, as they have in the past. But the plan is to roll them out. Deals on deck, India, Japan, and maybe South Korea. I just saw Besson on CNBC this morning. White House didn't respond to a request for comment. They're not responding. But they are talking to some people. I just don't think they're talking to China. The biggest movers of the day, Amplify Energy, 19%. Company announced termination of its agreement. Toyota Motors. Following reports, the company is considered a potential investment in the buyout major supplier, blah, blah, blah. Pony AI. Following reports, the company plans to mass production of robo-taxis. This is a China auto driving. Biohaven, 10%. NVDA is down a little bit. Shares fell following a report from the Wall Street Journal, which revealed Chinese tech giant Huawei is set to test its most significant advanced artificial intelligence processor, the Ascend 9010. The new chip could potentially replace some of NVIDIA's higher-end products. According to the report, the Ascend 910D is expected to be available in sample batches by late May. That could be a problem because remember, China, they did a $5 billion write-down for the China demand because the U.S. wouldn't let them sell there. So it could be a big thing. But I will argue NVIDIA is the greatest buy under $100. Now, I may be wrong. Remember, you don't want to follow a douche on the internet. Look at the 4-hour algorithm has gotten you in and it's gotten you, you bought lower. It semi-protects you from that huge downturn that you're seeing. But again, the 50-day is still moving negative. But from a valuation perspective, I would argue that NVIDIA is a good buy. The valuation is still an F. The PE has come down. The PEG ratio with the growth is what you want to focus on. And we can go and look. Why is it an F on valuation? Price to sales of 21 compared to the sector median of 3, indicating a costly stock. Additionally, the price to book of 34 is significantly higher than the sector of 3, suggesting NVIDIA may be overpriced. Wrap it in that we're still at the beginning of AI. And I pointed that out in 2022, 1980, I think we're in 1995, 1996, according to that chart. You've got 3 more years. So I'd argue that NVIDIA is one of the best. They are the leading chip. Okay, they're down 1% in the pre-market. If you can get this under 100, I would buy it under 100. I still like the stock. Okay, and let's not forget about Bitcoin. This is why you buy Bitcoin and IBIT and anything that's related to Bitcoin. Howard Lutnick, who's the Commerce Secretary, he hasn't been clear about exactly how much he owns, but he's got billions of dollars worth. And he said, when you're selling, I'm the buyer. This is the basically the Michael Saylor in the White House. When you're selling, he's buying. And what's my strategy in IBIT? It doesn't have 24 months. It's only been out for 15 months. And the 4-hour algorithm doesn't work very well on it. So I haven't figured out a strategy. But when the 4-hour algorithm tells me to buy, I've been buying. See those on the way down? I've been buying. And that's my strategy. I'm just buying for the long term. I'm using this like an ETF. I'm building up my position. Do I care that I'm down on this $55 buy when we're trading at $54.19? No, that was February. I don't care. Do I care that I'm down on the 56 that I bought in January? No. Do I care that I'm up, almost double digits on the October 14th? Sure. I mean, that's nice. I'm just setting my position. I haven't found a good strategy, but it's one of those that I have learned my lesson. I've traded in and out of this asset before, and I don't want to. I want to be in it. I'm just going to buy and hold. And that's the reason. Now, MicroStrategy might be your play. Bitcoin 100K magnet next week. It could happen this week. Saylor approves. Look at this weekly chart of MicroStrategy. And I have been clear. If I am trading MicroStrategy, it is in the 4-hour algorithm. And you want to know why? Look at the performance chart down below. This is why you get the 4-hour algorithm. This is why you get TRENDSPIDER. You could literally pay for your entire subscription with one of these trades because your average win is 69% over the 2 years, 24.6 months. Okay, this is back tested. This isn't an opinion. This is fact. Performance chart. You make 1,881% versus 1,023% for the asset. And you saw that weekly chart. Start bouncing back up. Look at the MACD. It's stretched. You have confirmation on this one. And where did the 4-hour algorithm get you in? Well, it got you in at 296. You're trading at 368. I'm sorry, in pre-market, you're at 374. And they have their earnings coming out. Earnings doesn't move this thing. They constantly just tell you exactly every week how much Bitcoin they bought. So that's why I like the 4-hour algorithm. This one and Tesla, it trades phenomenally on. Now, I will tell you, founder-led stocks are usually the best stocks. You look at Steve Jobs. He came back to Apple. When did Apple blow up? When Steve Jobs was in charge. Elon Musk. When Tesla's rolling, it's because Elon's in charge. Warren Buffett, Berkshire. There are so many others with founder-led stocks. Mark Zuckerberg with Meta. It's the vision that matters. Here's 15 led growth stocks built to dominate this decade. NVDA, Meta, Rubrik, Palantir, Mercado Libre, CrowdStrike, Tesla, Trading Desk, Cloudflare, which I went over, which was one of Austin's favorite from last week. Shopify, Axon, Hood, Globe E, Astera Labs, Rocket Labs. Okay, 15 of them. Pick your favorites. And maybe that's not enough. Here's 10 value stocks from Morgan Stanley. They say these are value stocks. Amazon, Microsoft, Visa, Walmart, Spotify, Meta, MasterCard, Shopify. Go and chart them. Go and look at them. Research them. Tell me which ones you like. I've got my favorites. But again, you don't want to listen to a douche on the internet. Go and find your favorites. Now, I will tell you one that seems to be coming up on every social media that I have. Oscar Healthcare. This is my healthcare provider. Okay? Revenues are exploding. It just became profitable and it's trading at just 6 times 2027 earnings. Michael Burry is a top buyer. Here's why the asymmetrical opportunity now. And he goes over everything here. There are 6 points, 7 points, let's see, 10. Yeah, 10 points. And he wrote an entire Substack about it. So it is a great, great look. I will tell you, I haven't read this. I've looked over Oscar before. I haven't been a fan, but I missed out. Okay, you can see this 5-year chart. Look at this one where it was trading at 6. It ran all the way up to 20. It's trading at 12 right now, but it's got some buzz. Now, Oscar is a high performance of performing badly. Let's see why. Has characteristics which has been historically associated with poor performance. Oscar is decelerating momentum and negative earnings per share revenue revisions when compared to other financial stocks to the point that it gets a sell rating from our quant. It's a sell in the quant. Would I go into this one? I'd go into it knowing that it's a sell in the quant. And why is it a sell? Well, the momentum. Look at the stock performance. It hasn't done well. You look at the valuation, it's trading at 16 times forward earnings. But again, it's trading at 16 times 2027. So your time frame has to be long. And you can see the PE ratio right here, 2024 actual, 122. 2025 estimate, then 2026 estimate, and then there's your 2027 estimate. Earnings per share estimated growth, 2025, 628%. And it's still trading down. Wall Street says it's a hold. There's 7 analysts that cover it. They think it's worth $19, but they've been chasing it down and up. I wouldn't put too much. Hold on one second. Penny! Okay, sorry. But I wouldn't put too much into it. Now, let's see if there's a strategy that actually fits on this one. Well, the 4-hour algorithm, it makes you 55%. Buy and hold makes you 91% over 24 months. Do you want this one? Your average win is 24%. Your average loss is 7%. If you can deal with those swings, have at it. But there is a strategy that works. Let's see if the 65-minute doesn't trade very well. We can go in the 1-hour stock battle and look at the last 60 days. It's done better than buy and hold, but it still hasn't done great. So I would say the 4-hour algorithm is probably your best bet on this one. I would argue that their time frame is much larger and they might be talking their own book. But that's just it. Now, I will leave you with, we're going to go over earnings in a little bit, but this is a legendary note from Dan Niles. If you want to get ready for the week, This is just the one thread that you need to read. It's quite long, but it goes over all of the earnings. And again, you just need to be on Twitter. You don't need a paid subscription to read this. You just need to be on Twitter. I've repeated many times, I believe Charles Darwin has the right advice for investors today. It's not the strongest nor the most intelligent of species that survives, but the one that is most adaptable to change. With the shifting daily news on tariffs and their result economic impact, these words have never been truer. As John Maynard Keynes said, when the facts change, I change my mind. What do you think, sir? So his final thoughts, this is a typical bear market rally of 10 to 14%. He says it's a bear market. Valuations do matter over the long term. And remember, he's a bear on the Mag 7. The pull forward in demand will lead to negative GDP growth in Q3. Number 4, the above factors will probably cause a retest of the lows for stock prices at the very least. But again, I'd argue if you're looking at QQQ, okay, and we're looking at those February highs, and you're going back to test the lows, it's not that far. So if your time frame is long, start buying. Because you want to start buying when you're in the recession, not when you're out of the recession. You want to start buying when you're in the recession. You want to take advantage. Who is it? Charlie Munger? When the S&P's down 20%, just start buying. When it's under its 200-day, start buying. And we can look at the daily, and your 200-day on QQQ is under the 200-day. I'm sorry, your price is under the 200-day. We can go and look at the S&P 500. Again, you're under the 200. You just had that death cross. Does it matter that you had a death cross? Absolutely. Does it mean that you're going, you're absolutely going? No. Look at this death cross. It came back up, but you continued down until you had the golden cross here in February 2023. So you basically went 1 year. So it could be a year, but I'd argue your time frame should be good. Now, let's go over and let's look at Earnings Hub, because we do have some earnings. The Waste Management today after the bell. Again, tomorrow you have PayPal, you have SoFi, and you have Spotify before the bell opens. You have Coke, Pfizer, huge before the bell. You have Corning, GLW, which I put in one of my portfolios. You have Visa, Starbucks, Booking Holdings, Snapchat, First Solar, Mondelez. And then on Wednesday, you have Caterpillar, ADP, Garmin, Etsy, GE Healthcare. You have Wingstop, which was a huge, huge winner. And then after the close on Wednesday, you've got Microsoft, you've got Meta, you got Robinhood, Qualcomm, Vichy, eBay, Coke, this is the Coke Consolidated. KO is the one that you want. That's what Buffett has. KLAC. You got Sprouts Farmers Market, Teladoc. And then Thursday, you have Eli Lilly, MasterCard, McDonald's, Roblox. It is just a plethora of earnings this week. So go and find your favorites. I'm not here to tell you exactly. You guys know what my favorites are. It's the core portfolio. It's the Mag 7. It's what it is. I am down year to date. I'm not up. I'm hurting, but I'm still buying. I do believe that you just buy and hold, and losing money is just part of the game for me. If you don't want to lose money on VOO, then you can get, S&P 500. Here's the 4-hour algorithm. Look at how good this does. The 4-hour algorithm, 40% over the last 2 years. Buy and hold on VOO, 33%. So if you're scared, you win 60% of the time. It's 20 positions. So you win 12. 12. You lose 8. Now, the Liberation Day, remember, we ran this one for QQQ, and it's back tested and does really well. It doesn't have you in. If you're waiting for the perfect time to get in, this may be the strategy. But again, you have to have a strategy. Don't be out of it. Make sure that you're trading with a strategy. Make sure that you're investing with a strategy. If you have any questions, hit me up. I'm all over. My stuff is, here on Linktree. You can just go and all the socials are up there. Again, Seeking Alpha, the sales going on. TrendSpider, great offer. Oh, by the way, if you want free stocks, Webull. I have my Webull account and I go over this all the time. I think I'm up near $10,000. It is heavily, heavily risky. Yep. $10,500 right there. $10,522. 2022, I believe I started it. Might have been 2023. I started with $1,000. And I said, hey, I'm just going to be risky. So far in the portfolio, it is Apple, it's Google, it's iBit, NVIDIA, Spotify, and Tesla. That's it. You can't get more risky than that. There's no QQQ. There's no S&P 500. There is nothing safe in that whatsoever. And I have $1,300 in cash. So what's that? 13% cash? 13% cash. So again, I have Webull. I love it. I like trading in that one. The app is far better than Fidelity, which is where I have the large majority of my money. But you can get to all of this through Linktree. Okay. And by the way, if you don't have a phone service or you're paying crazy amounts, also visible. I love this service. I don't know why people don't get this service. Oh, and their website messed up. Let's see. Why is this doing this? Oh, this is funky. Yeah. Ooh, their plans are bad. But I think it's $35 a month. Let's see. Check out our plans. Nah, it's still effed up. But yeah, you save $20 off your first month when you use that link. So Tesla, you can buy a new Tesla. It is what it is. But if you have any questions, hit me up. Okay, I've rambled on too long. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.